Thank you very much, and good afternoon, everyone, and welcome to this webinar where we'll try to explain the EU VAT reform that comes into effect July 1st, what it means for sales into the EU, and we'll discuss changes broadly and speak in detail about what it means for sales on marketplaces in the EU. So my name is Håkan Tyr. I am Chief Revenue Officer at Fruugo. If you're not familiar with Fruugo, we're a global cross-border marketplace with localized sites in over 40 countries. If you want to learn more about what we do, you can read up at sales.fruugo.com or sell.fruugo.com, sorry. Since we are a marketplace focused on cross-border sales, changes in trade regulations are of great interest to us, as well as for sellers on our platform. So to explain the upcoming changes, we've got not one, not two, but three experts with us today from KPMG, and I'll let them introduce themselves. So let's start with Paul, shall we?
Thank you. Thanks, Hakan. By way of introduction, my name is Paul Casey. I'm a director in the VAT team based at KPMG in the Manchester and look after a number of large and medium-sized retailers, and in particular a number of e-commerce retailers based across the north of England. And what I'd like to do this afternoon is just walk you through the changes that are taking place to the VAT system for sellers, both who ship directly to customers and who sell through online marketplaces from the 1st of July. I'm joined today by Ian and Lorenzo, who are my colleagues from supply chain and customs respectively. So I'll let them introduce themselves now. Thank you.
Lorenzo, do you want to go first?
I think you're there, Ian.
All right. Okay. Hi, everybody. So Ian Prince, and I lead our supply chain practice here in KPMG in the UK. And I've spent the last 20 odd years looking after international and European supply chains for people. So where we ship from, sell to, where we and obviously in the warehousing and parcel side. And my two partners in crime, Lorenzo and Paul, I never thought I'd be spending so much time with them over the last about a year ago. So yeah, look forward to the conversation today from a supply chain perspective. So anything to do with freight, parcel, warehousing, e-fulfillment, inventory, and what people are doing. Look forward to it. Lorenzo, virtual baton to you.
Thanks, Ian. Hi, everyone. My name is Lorenzo Rossetti. I'm a director in the trade and customs practice here at KPMG. For my sins, I've been involved in customs for almost 38 years and wanted to be a customs officer when I was 13, and I apologise for that. I'm very sorry. As Ian said, we've been dealing with all sorts of fallout from EU exit, but more importantly and more pointedly in terms of what we're talking about today, there are lots of changes that are coming through for e-com in terms of both UK and EU processes, and clearly Paul's going to take most of the discussion in terms of the VAT changes, but I'm here just to support on any customs issues or customs questions. I'll hand back to Paul.
Thank you. Thanks, Lorenzo. I'm not sure if I did draw the short straw or not today, but unfortunately you're going to have to put up with me for most of the presentation. So just to begin with, the highlight really that all businesses operating in e-com should know is that from the 1st of July 2021, there are major changes taking place within the whole of the EU on how to deal with VAT on e-commerce transactions. And fundamentally, they changed two things. Firstly, how you account for VAT on sales to customers in the EU. And secondly, who is going to be responsible for accounting for the VAT. So within the EU, we've had what we call for a number of years now a one-stop shop system, and that's applied primarily to supplies of services that are delivered to customers, private individual customers in the EU, particularly where they're delivered through electronic means. So for example, say apps and downloads and things like that. And businesses that have been supplying those have used what's called a one-stop shop system. From the 1st of July, the one-stop shop effectively becomes almost like a three-stop shop. because we end up extending the one-stop shop to cover a whole broad range of services. So that's the first one. The second one-stop shop is we have the same sort of system, but now applying to suppliers of goods within the EU, so where you sell goods to private individuals in the EU. And then the third version of the one-stop shop is what's known as the importer one-stop shop, which is for businesses that are established outside of the EU, selling imported goods to customers in the EU. And from the 1st of January, when the UK left the EU VAT system, the UK would now be covered by the importer one-stop shop in most cases. We have a number of other changes taking place. So at the moment, VAT tends to be collected on a significant number of imports into the EU, but custom duties are only collected if the value of the goods is over €150. Now, there will be an alignment to some extent, particularly with the importer one-stop shop, around the collection of VAT and customs. So that €150 threshold becomes quite important. That's not to say that anything below €150 will not be liable to VAT. It will. And in fact, more articles will become liable to VAT because we will also see the removal of what was called the low value consignment relief for VAT purposes in the EU. So historically, most member states have allowed goods that are below €22 to enter the EU from outside the EU without collecting VAT. And the reason for that was in the years prior to e-com, it was simply too onerous and not cost effective for the tax authorities to collect the VAT, given the cost of collecting versus the amount of revenue that they would actually generate from it. So they just decided to impose a de minimis threshold. However, that threshold will go from the 1st of July. That is completely abolished. So all imports to the EU will become liable to VAT. And finally, there are new rules being introduced where an online marketplace is involved in the transaction. So an online marketplace, as we'll go on to see later, is very, very widely defined, but it can effectively take the form of any platform that is involved in facilitating the sale of goods to customers in the EU. And the changes specifically make the online marketplace more responsible for accounting for the VAT on the sale to the final customer. So at the moment, the online marketplace isn't necessarily involved in that VAT accounting process. However, from the 1st of July, they will become more involved. Now, you might ask, why is that change being brought about? The reason that change has been introduced is what we've seen, obviously, with a massive explosion in e-com over the last 10, 15 years or so, is that there are a number of sellers established outside of the EU who tend to sell goods to customers within the EU. And it's very difficult for the EU tax authorities to try and tax those non-established businesses. So the response has been to put the onus on the tax collection, to place the onus for tax collection onto the online marketplace rather than the seller of the goods. So just looking at what the system is at the moment, and this is for sales between 2 EU member states. So at the moment, the rules state that the place of supply, that means where we account for the VAT, is where the goods are shipped from, and local VAT is charged as a basic rule. However, where as a business you exceed sales of over 35,000 or 100,000 euros to customers in any particular EU member state, you have to register for VAT in that member state and account for local tax. Once that threshold is exceeded, as I said, there is a requirement to be registered for local tax. And for many large retailers, that can result in them having to register for VAT in 27 EU member states because they will have breached those thresholds in all member states. So It's a relatively onerous system, and it's a system that is very much, I would say, quite administratively burdensome for businesses which operate it. But to give you some very basic examples, we have goods being sold by a seller in Italy to a customer in France. If the Italian seller is below the distance selling threshold, he will charge Italian VAT. Once he exceeds the distance selling threshold in France, he will be required to charge French VAT and have a French VAT registration. So that's fundamentally how the system works at the moment. And as I said, it's quite complicated. It's also difficult for tax authorities to police, because the onus really is on the seller to make sure that they register for VAT locally once they've reached a threshold. So how is that changing from the 1st of July? Well, from the 1st of July, this requirement for these so-called distance sales VAT registrations will cease. If you're an EU established business selling to private individuals in other EU countries, you will use what's called a one-stop shop system, unless you decide to register for VAT in every country, which I certainly wouldn't recommend. And the way that will work is it will shift the place of supply, i.e. where the VAT gets accounted for, from the country where the supplier is established to the country where the customer is established. The legislation talks about where the dispatch or transport of the goods to the customer ends. So in reality, it's where the customer resides. And as I said, there will be this new one-stop shop system. So what that effectively looks like is that you have a single VAT return that you submit in addition to your local VAT return in the country where you're registered. You submit a single VAT return covering sales to customers in all 26 other EU countries. So it has 26 boxes on there, and you report the net value of sales and the VAT that you're declaring on those sales to customers in that country. You have the one VAT registration in the country where you're established, and you make a single payment of the VAT that's due in all 26 other member states to the tax authority in the country where you're established, and they then split that between the 26 countries depending on where your sales have been made. So that leads to standard record keeping requirements across the EU, because everybody is using the same VAT return system. As I said, it's a much simpler way of accounting for VAT in most cases, because it means that you don't have to maintain these multiple overseas VAT registrations. Everything is just captured on the one return. What it does mean, however, is that at the moment, if a seller is only registered in one or two EU member states because they've only reached the threshold in a small number of countries, they're now going to have to think about accounting for VAT throughout the whole of the EU. So at the moment, it might be the case that you're only maintaining overseas VAT rates in one or two territories. From the 1st of July, you will need to think about the VAT rates that apply to your products across the whole of the EU, if that's where you sell goods. The one-stop shop return cannot be used for domestic sales. So as I said, you will continue, if you're established in one country in the EU, you'll continue to use that VAT return, that VAT registration to account for that on domestic sales. And you cannot use the one-stop shop VAT return to recover VAT that you incur on purchases. If you do incur VAT in another country, then you would have to make a claim to the tax authorities in that country to get back the VAT. There is also the Minimus Threshold, which applies to what the EU defines as micro businesses. And that is a threshold of €10,000 of revenue across the whole of the business's operations. So that's not on one member state basis. It's not looking at the value of the distance sales. It's a total turnover of the business. So very small businesses with turnovers of 10,000 or below are exempted from using the one-stop shop and can continue just to charge local VAT on their sales. But all of this only applies if your goods, and if you're established in the EU and your goods are already in the EU at the time when they're sold to the customer. So what happens if you are an importer? So this will include most UK businesses, for example, that are selling to customers in the EU. So at the moment, the place of supply for VAT purposes is deemed to be the country where the goods are shipped from. So to show you the example below, we have a seller that is based in the United States selling to a customer in Italy. So the place of supply for VAT purposes is broadly deemed to be where the goods are shipped from, which would be the United States. The United States would say that's an export, so we don't want to collect any VAT on that export. So the seller doesn't have to charge any VAT to the customer or any US sales tax to the customer. However, if the goods are above €22, the tax authorities, and in this case Italian tax authorities, will seek to collect import VAT when the goods are imported into Italy. If they're below €22, then many member states will operate the low value consignment relief at the moment, so they won't collect the tax. The import VAT conundrum, shall we call it, has been a perennial problem for importers which operate in this scenario, and I think we've really begun to see that that problem exacerbated since Brexit, where you've got a significant number of UK e-com retailers selling to customers in the EU. And the question really turns on who's actually going to pay that VAT when the goods are imported, and if they're over €150, who also pays the duty. And you potentially kind of got two options really. One is that the customer is the importer, so the customer is named as the importer of the goods into the EU. The question there is who actually then pays and collects the taxes. Do you want your customer to pay the tax to the logistics provider so that they can pass them on to the tax authority, or do you as a seller want to pay those taxes on your customer's behalf? What we've seen in many cases is that most businesses have opted for the latter. So typically they would say, we don't want to burden our customer with getting a text message or a card through the door saying you owe X amount of duty, VAT, and probably handling charge on top of that. We would rather take that burden away from our customers, so we will pay them on the customer's behalf. That's always created a slight problem, because if the customer then sends the goods back, the VAT that's being paid is actually your customer's VAT, so you can't claim back that VAT from the tax authority. The alternative is that as a seller, you might try and restructure your supply chain slightly so that you as a seller are named as the importer when the goods enter the EU. So you shift the place of supply to the country where the goods are imported. But that can often result in a requirement for multiple VAT registrations around the EU as a result of either being established locally and selling goods locally in the country, or because you've exceeded the distance selling threshold if you import into one member state and then move the goods around in the EU. There's also been some confusion around situations where goods are cleared in one member state and then moved to a different member state, which is where the customer resides. So what we've seen quite a lot since Brexit is that many of the fast parcel operators transporting goods from the UK will clear the goods in the Netherlands or Belgium because they're relatively close to the UK, and then will truck the goods into another EU member state, so for example Germany. Prior to the 1st of January, that would have been taxed either in the UK if the seller was below the distance selling threshold in Germany, or in Germany if the seller had breached the distance selling threshold. Whereas now the import VAT, if it's being paid where the customer is the importer, is going to be paid in the Netherlands or Belgium, i.e. the point of entry into the EU. So the German tax authorities are losing out on significant amounts of VAT on sales that they would have previously been collecting. And that's been a problem that has been exacerbated, as I said, as a result of Brexit, and is something that we're beginning to see a little bit of action from certain tax authorities around over the last month or so. So what changes on the 1st of July if you import goods from outside the EU into the EU? The first thing to note is that there will be a difference in the rules depending on the value of the consignment of the goods. So low value goods, that is anything below 150 euros, have different rules applied to them, potentially, than those that are over 150 euros. So the first thing to work out is what that 150 euro threshold looks like and how it's calculated. So the 150 euros is based on the consignment value. So that's a package that you're actually sending. So if you're sending 3 items in a pack, you have to count the value of the entire package. The threshold also is based on what's called the intrinsic value. So essentially it's the value that you're selling the goods to the customer at. However, you can exclude VAT from that 150 euro value if VAT is chargeable. And you can also exclude the freight and insurance charges if you separately disclose those to the customer. So if your customer pays 150 euros, but there's a €5 carriage charge in there, then the value of the consignment will be 145 euros. So one of the fundamental changes from the 1st of July is that the place of supply will shift to the member state where the customer is located. So that, again, the legislation talks about where the dispatch or transport of the goods to the customer ends, i.e. where the customer resides. And that's where VAT fundamentally will be collected. So the options that non-established businesses in the EU have got are basically 4. One is to use what's called the Importer One-Stop Shop, or the IOS scheme. And the way that the IOS scheme works is very much like the one-stop shop. So you would have a VAT registration in one member state and submit a VAT return that shows the VAT due in the 27 member states where your customer is located. So you submit one return and you collect local VAT based on where your customer is located. We're going to look at how the IOS works in practice in a moment. The other option might be to use some kind of special clearance method. So it might well be that you put the goods into, say, transit in one member state, and then you clear them locally in the country where the customer resides, so that you can ensure that local VAT is paid. You can, if you want to, continue to use the rules that we looked at on the previous slide that are in place at the moment. So you can still, if you want to, continue to clear in the customer's name, with the result that any VAT and duty that's being paid by you is being paid on the customer's behalf. And then the fourth option that certainly some of the larger clients that we advise are looking at is what's called a bulk clearance solution. So what's being looked at here is to try and do a bulk clearance of the retailer's own goods in one EU member state, and then to effectively dispatch or to put the goods at that point into the fast parcel operator's system so that they can then be couriered off to the customer in the relevant country. And the reason why that model is being looked at is because it means that there is one import of goods into the EU. So the retailer doesn't need to think about the difference between goods that are below 150 and those that are above 150. They can do one clearance. The downside, that there are a number of downsides to that. The main downside is potentially you end up paying duty on everything, whereas if you use the IOS, you only pay duty on the goods that are above 150. So there is that particular downside. There are also challenges around how we actually get logistics companies and fast parcel operators to deal with sort of a bulk clearance solution, and whether you need to put some kind of line haul into the EU to get your goods into the EU in the first place. So it's a solution that's been investigated, but at the moment, I would say it's still very much work in progress. So What does the importer one-stop shop look like in practice? As I said before, it's a single VAT registration to report a VAT in all 27 EU member states. So you have one VAT return that captures the VAT based on the applicable rate in the countries where your customers are located for the goods that you sell to them. It can only be used for consignments below 150 euros. And the time of reporting that the transaction is when the goods are imported into the EU. Any VAT that's reported through the IOS is technically what we call supply VAT. So it's on the domestic supply of goods to the customer. And what that means in theory is that if you choose to use the IOS, then the import, the VAT that would normally be collected at the time of import is ignored for VAT purposes. And it's just considered to be that the goods have been imported VAT free, and then there is a domestic supply of goods to the customer. One of the advantages of the IOS is that you can clear goods in any EU member state. Because you're collecting VAT based on a domestic supply to the customer, it doesn't matter where you import. There's no import VAT to be paid. So it doesn't matter which country is used to clear the goods. If they're being sold through the IOS, you'll collect VAT based on where your customer is located. All non-EU sellers wishing to use the IOS are required to appoint a VAT intermediary. So that's somebody who will have joint and several liability over any VAT debts that might arise. And that now includes UK businesses. So as a UK business, if you want to use the IOS, you will have to appoint a VAT intermediary established in the EU. And the IOS returns are filed on a monthly basis. So just moving on now to the rules for online marketplaces. And as I said at the outset, the rules for online marketplaces are changing quite significantly. So historically, online marketplaces have not played a great, have not had a great involvement in the VAT accounting for sales to customers in the EU. Going forward, that will change quite significantly. The thing to say is that the term online marketplace and electronic interface are used interchangeably. So some of the publications that the European Commission has put out refer to online marketplaces, some refer to electronic interfaces. They are ostensibly interchangeable, and we've used them interchangeably here. They are defined in pretty much the same way. So there's no real difference between an online marketplace and an electronic interface if you come across both terms. But as I said, you will see both terms used. What I would also say is that the definition that the EU has given to an electronic interface is extremely broad and is intended to capture a whole host of different platforms and a whole host of different situations in which somebody may be involved to some extent in affecting the sale to the customer. So the EU definition of an electronic interface is any kind of platform. So that could be a website, it could be a mobile website, it could be an app, which brings together the customers and the sellers, resulting in the sale of goods via that electronic interface. So to drill down into a little bit more detail, now I do apologise, we have literally lifted the EU definition here. It contains a lot of double negatives, and I will explain what it says in practice after I've read out the definition. So the definition says an electronic interface is not considered as facilitating the supply if it does not set, either directly or indirectly, any of the terms and conditions under which the supply of goods is made, and is not either directly or indirectly involved in authorising the charge to the customer in respect to the payment made, and is not either directly or indirectly involved in the ordering or delivery of the goods. So that's kind of the EU's definition. Trying to unpick that and sift through all the double negatives basically leads to the conclusion that if an electronic interface does any of those activities, and you have to ignore the double negatives in all of this, then they are deemed to be facilitating the supply. And if they're deemed to be facilitating the supply, they will have a role in the VAT accounting. So to unpick that definition, if an electronic interface is involved directly or indirectly in setting the terms and conditions under which the supply of goods is made, then they will be involved in facilitating the supply. Likewise, if they directly or indirectly are involved in authorising the charge to the customer in respect to the payment made, again, they will be considered to be facilitating the supply. Or if they're directly or indirectly involved in the ordering or delivery of the goods, again, they will be considered to be facilitating the supply. So any one of those three tests needs to be, any one of those three tests can be met. If any one is met, then the electronic interface, the online marketplace, will be considered to be facilitating the supply and will have to comply with the new online marketplace rules. Now, what's important here is that, as I said, the EU has said any one of those three conditions can be met or needs to be met in order for the electronic interface to be defined as being involved in facilitating the supply. In the UK, under rules that were introduced on the 1st of January, all three of those conditions would need to be met. So the UK uses very, very similar terminology, but requires all three conditions to be met for an electronic interface to be defined as an online marketplace and caught by the new rules. So just looking at the diagram at the top and what that means in practice. At the moment, we have an underlying supplier A selling to an EU customer C. So at the moment, the VAT accounting rests entirely with A. B, as the electronic interface, is not involved and is not required to be involved in the VAT accounting at all. So A would need to understand whether it needs to charge VAT to its customer C and would need to account for VAT correctly on that supply. And that could either be through import VAT, or it could be, if the goods are already in the EU, potentially, it could be that A has to register for VAT to charge it through to C. Under the new rules, there will be two supplies. A will sell to B, which is the electronic interface, and then B will sell the goods to C. Now, these are only deemed supply for VAT purposes. They are not, it should be said, they're not supplies under the terms of sale. It is purely for the VAT accounting. So the way that that will work is that A will make what's called an exempt with credit supply to B, which means that no VAT needs to be accounted for. However, B, to the extent it is incurring any VAT on related costs, is able to claim back that VAT. So it doesn't leave B in a position that it can't recover VAT. And likewise, A can get back any EU VAT. The sale from B to C is the deemed B to C supply. So that is effectively the supply that was previously taking place from A to C, and that will become a taxable supply. So the requirement to account for the VAT or consider how to account for the VAT will be shifted from A to B, from the supplier to the online marketplace. And then C will incur VAT in the way that B has determined. So just to show you how that applies in practice, we've got two examples here. One is for imports of goods from outside the EU. So this would apply if you were selling to customers in the EU through an online marketplace and the goods were coming from outside the EU. So in this particular example, we have non-EU goods, i.e. imports, sold to an EU customer. The value of the goods we are assuming is less than 150 euros, and the underlying supplier can actually be based anywhere. The origin of the goods is outside the EU, so it will be an import, but the supplier could actually, in theory, be in the EU as well as outside the EU. So the way that this will work from the 1st of July, is that the taxable person who is facilitating the distance sale will be deemed to have received and supplied those goods themselves. So what that would mean in theory is that the supply from A to B would not be a supply for EU VAT purposes. So there's no requirement to account for VAT on that supply. If the goods are coming from outside the EU, the electronic interface then would need to account for VAT on supply 2, that's a supply from the electronic interface to the customer, using either the import one-stop shop, because it's an import from outside the EU of goods less than €150, or using one of the other solutions that we've proposed. So either having the customer act as the importer of record, or potentially the customer named as the importer of record, but the VAT is paid by either the electronic interface or by the supplier. To show you the second example, so this is where the goods are already within the EU. So the goods have already been cleared for free circulation in the EU. We have an EU customer, and there is no value threshold in this particular example because the goods are already in free circulation. So we don't need to think about the €150 threshold, and we have a supplier who is based outside the EU. Now, in that particular example, where the taxable person, i.e. B, facilitates the supply of goods within the EU, through the means of an electronic interface, such as a marketplace, then again, it will be seen that there is a supply from A to B and a further supply from B to C. So what that would mean is the supply from A to B is disregarded for EU VAT purposes, and the supply from B to C would be taxed under the new EU one-stop shop rules. Unless the goods remain in the same country, in which case B may have a requirement to be registered for VAT in that particular country. So VAT is being collected in the country where the customer is located, which is what the new rules intend to do. That's the goal that the new rules intend to achieve. But it's B who has to consider the VAT accounting implications rather than supplier A, as is the case today. So I'm not going to try and distill all of this because it does get extremely complicated. But what I think this is trying to show you is that you need to consider all of the supply chains that you may be involved in, where you're using online marketplaces, or you may be considering using the iOS, to understand what the VAT accounting implications look like from the 1st of July. Now, in some cases, it may well be that there are options as to who might pay the import VAT. So if goods are over the €150 threshold, it might be that you have options as to whether you as a seller pay the import VAT, or you shift that responsibility onto the customer. For goods that are below the €150 threshold, you then have the option of using the iOS, and that may change who is responsible for payment of the VAT, particularly if you're selling through an online marketplace. So our recommendation really is to draw up every potential scenario that you could think of for all of the different supply routes that you might have. So it might be selling through your own website, it might be selling through different online marketplaces, and you might need to try and work out what those online marketplaces are going to offer as a solution to work out who is going to be paying the VAT on the sale of goods to the customer from the 1st of July. And that will then translate into, where do I need to be registered for VAT? Where do I need, for example, to have an iOS registration? Do I need to think about appointing a VAT representative in any particular country? And how do I go about communicating that to the customer, setting my prices, dealing with the fast parcel operators that I work with as well? So just to draw that all to a close, really, what common issues are we finding with businesses that we advise? Well, the first thing I would say is that many businesses do sell through different distribution channels. Many businesses will sell through their own website and probably use a combination of different online marketplaces. And what that will present as the first issue is understanding what the solution looks like for each of those distribution channels and each of those sales channels, because you will probably need to do something different depending on how you sell. If you sell goods, let's say all of your goods are below the €150 threshold, if you sell goods through your own website and you arrange a transport, you will probably want to think about the IOS for that solution. If, however, you sell the same goods through an online marketplace, then the online marketplace will probably take over the VAT accounting responsibilities for the sales affected through that channel. So you will need to think about each of the sales and distribution channels that you're using to sell to customers in the EU. And that's where the mapping can come in useful. Secondly, thinking about how you get to the intrinsic value, this €150 value. Do you offer free shipping? For example, if you offer free shipping, you will need to take that into account when you're looking at the €150 threshold. What happens where customers buy multiple items? You can't apply the value based on individual items. So you can't say, you know, if I sell 3 items for €60 each, I can use the IOS, because that's not how it works. If you send those, if the customer orders those 3 items in one order and you send them all together, that will be over the threshold. So you need to have some sort of system to be able to identify at which point you breach the €150 threshold. As we said, where you're selling through online marketplaces, do they meet the definitions that the EU has set out to say that they are facilitating supply and they will take over the VAT accounting, and what solution are they working towards? So you will need to speak to the online marketplaces that you deal with to understand what solution they will offer and what information they will need to collect from you in order to get their VAT accounting right. It's likely that you will need to submit EU VAT returns, particularly if you're using the IOS. So who is going to prepare those returns? Who's going to be submitting them for you? You probably will find that you might need to, although you might be able to significantly reduce the number of VAT registrations and therefore the number of VAT returns that you're submitting, you might need to be submitting them more frequently, because the IOS returns are required on a monthly basis, whereas many member states will probably only require quarterly returns. So it might well be that you need to think about how you would manage that process. There are particular issues with regards to works of art and second-hand items, because of the way that VAT is accounted for on those items. I won't go into those in too much detail now, but if any of you do have particular questions around that afterwards, we'd be happy to answer those questions. And where you sell subscription-based goods, so membership clubs have become very popular during lockdown, particularly things like food membership clubs or, you know, clothing subscriptions, that kind of thing. How would you work out the intrinsic value of those goods? Because typically your customer will be tied in for a period of time, or there might, you know, it might be that they end up paying for a subscription, and that may not align exactly to what the intrinsic value is. What are your carriers doing, and what information will they expect from you? If you're going to be using the IOS, then you want to make sure that your carrier isn't going to be paying import VAT when the goods go into the EU, because you'll be collecting and paying the supply VAT from the customer. So you need to speak to your carriers to understand what systems and processes your carriers will expect you to have in place. You know, how will they be able to identify which goods are going, or which consignments are going through the IOS versus those on which they have to collect duty and import VAT. What happens where you've got multiple consignments? In some cases, some retailers will say that they will send things separately. Obviously, one very well-known one gives you the options of saying, we'll send them, as and when they arrive, rather than sending them in a single consignment. So how do you deal with that? If a customer's placed an order for goods above €150, but you send them separately, how would you deal with that from an IOS perspective? What VAT registrations would you need from the 1st of July? It might be that you will need to re-register for VAT under the IOS. The IOS registration is a separate registration, so if you're thinking of using it, you will need to take action and register for VAT under the IOS. And likewise, what VAT registrations might you be able to close down? If you're a UK business, you might have already closed some VAT registrations down in the EU already from the 1st of January, but you might be able to close additional registrations down. Coming back to your systems, what data do you need to make the correct taxing decision? If you're using the IOS, or if you're selling through online marketplaces that use the IOS, they will probably need to know the VAT liability of all of the products that you sell in all of the countries that you sell. And a lot of countries do have reduced rates for particular items. So how will you go about collecting that information for all 27 EU member states? What information do you need to provide? What information do you need to retain? So, for example, how would you prove that the goods have left the UK? What information do you need to show on your invoices? And then, as we said, where you're dealing with multiple electronic interfaces, what information do those interfaces need from you in order to be able to process the transactions correctly? So, in summary, what I would say is that, given that we've got just over a month to go before all of this comes in, I think there is a lot of work for businesses to do. The actions I would take at this stage would be to think about speaking to your distribution channels, the online marketplaces that you deal with, and the carriers that you use, to understand what they are planning to do from the 1st of July, what their capabilities are, and then overlay that with the supply chains and the goods that you sell to customers in the EU to work out which solution is best for your business. And at that point, I think I've probably spoken for long enough. Be happy to take any questions. Thank you.
Thank you very much. Thorough overview of the coming changes. We had an avalanche of questions come in, so it's clearly something that people are wondering about. We can probably run over a little bit. I don't think we'll be able to cover everything in this session, but we will endeavor to reach out to you guys individually. So first of all, in terms of questions, we had a lot of questions specifically to how Fruugo are going to handle it from our side after July 1st. Obviously, we will be collecting and remitting VAT as required by the new rules. We calculate the VAT based on where the customer is and what the product category is. Since non-EU retailers or import consignments need to include the IOS number on each consignment, if it's not available on the consignment, as Paul said, it's likely that the consumer will have to pay VAT again, which will make for bad customer experience and will lead to overpaying tax, which no one wants. So it's really important that as a seller, you can get that number onto the package. So what we've done to help facilitate that is that from July 1st, we will include that number with the order details that we provide either through our API or through our retailer portal, if that's how you access your orders. And we work with our integration partners to make sure that they can use that and pass it on to wherever the labels are printed. I think the challenge is going to be how you get the number onto the appropriate label. So the kind of the last step, and we've been getting a lot of questions about that. We had this experience before, because essentially the same reform that the UK implemented in January, and Norway and Australia and New Zealand have done it previously. And the main challenge, and Paul alluded to this as well, is what happens if you have orders from multiple marketplaces in the EU, and can you assign the VAT number on an order-by-order basis? And a lot of sellers struggled with that and are still looking for solutions. We've been doing some investigation. A couple of the carriers, so DHL and DPD, can do that if you're using their interfaces to print labels. Royal Mail, as far as I can tell, can't, and don't seem to have plans on providing that. So if you are tied into a carrier or a system that doesn't allow you to split it by order, or do it by order, you probably want to look into some sort of carrier management solution. I know ShipStation have that kind of functionality, but I'm sure there are several others out there. But yeah, ultimately, that's going to be a problem you need to figure out. Yeah, so we'll move on to some of the questions that came in. We can run over a bit, but there are probably enough questions to keep going the rest of the day. Ian has his hand up there.
Yeah, I can thank you, everyone. Paul, take a breather for a second. I think one of almost step one in all of this as well that everyone is seeing is you need to get and look at the geography. Yep, you need to look at the flows, you need to look at the commercials, you need to look at the numbers, and then that table that Paul produced, where look at the from and the tos, the values and the things. It is one of the most useful, and would you then obviously decide which are the best on the solutions that you've got as well. The geography is coming alive with all of us, with our clients as well now, and we're seeing it with with marketplaces, with some of the other businesses as well. You've got to look at the geography and then look at how you do all those fulfillment routes as well. Hakan, you're exactly right with our experience with the parcel providers and the labeling and the carrier selection software. They're on a journey as well, and they will all be on a journey on this for the next X amount of weeks and months, and it will start plateauing once people decide to be in or out of it. But that communication and making sure you understand that whole flow, just allows you to make the right decisions on that side. I know there was one question specifically, Paul, returns. I know that was one thing that I think you touched on, but returns was what I got brought up a couple of times in the themes.
Yeah, so at the moment, one of the issues with returns is that if the import VAT, when it's paid on import to the EU, is declared in the customer's name, even if the retailer pays it, then because it's the customer's VAT, it can't be recovered if the customer sends the goods back, because it's not the retailer's VAT, it's the customer's VAT. Under the iOS, it becomes a retailer's VAT. So if the customer sends the goods back, you can make a claim to the tax authorities to get the VAT back. And that is one of the real benefits for many e-commerce retailers of using the iOS.
Brilliant.
Another question that's popped up a few times here is the €150 threshold and how to handle that. And I hadn't seen this, but apparently a large American marketplace has decided to deal with it by not allowing you to sell items for over 150 from outside the EU into the EU. So what we're doing is, if obviously we recommend that you ship those items DDP, so delivery duty paid, and we will help you recover the cost of that by collecting local VAT and passing that on to you. but yeah, in terms of providing the best customer experience, that's obviously what we recommend. You can ship to the EU and let the customer pick up the tab for that, but again, that's not a particularly good customer experience. All right, so we had a whole bunch of questions. Again, we're not going to be able to get to all of them. So let's pull Lorenzo in because you haven't had enough. A question about if I have like split delivery. So what if I ship some of my orders from within the EU and ship some from outside? How do you best handle that?
Clearly, in customs terms, it's completely different in respect of declarations, because clearly movements within the EU, there's no declaration. Movements from the UK or from outside the EU into the EU will need a declaration, and it's that the requirement is probably the VAT requirement there will be having both the IOS and the OS, which is the internal VAT process to try and simplify the movement of goods and the VAT reporting. So none of the, what we I think it's probably worth just rewinding a couple of bits. None of this is easy. The changes that are being brought about are there to effectively for the authorities to have a better control of effectively cross-border internet sales. The UK introduced something similar on the 1st of January. The EU, it was going to happen on the 1st of January, but clearly the EU decided to push it out until July. None of this is easy. We've got very few days and weeks to work out what needs to be done, but the clear message, and it's backing up exactly what Ian has said. It's about mapping those supply chains, understanding your values in terms of your intrinsic sale value, and whether it's above or below the €150 limit, using the OS or the IOS. If you don't use the IOS, it has another impact in terms of not being able to clear goods in one member state and then move them out to other member states. There was a change in the Union Customs Code, which is the customs legislation that says if you're doing that, if you're below the €150 limit, but you're not using the import one-stop shop, you have to clear those goods for customs in the country that your customer is in. So essentially, you'll be delivering goods, let's say, into France, but then they'll have to be moved across the EU under what they call transit. Now, not all shippers will be able to do that. The shippers that will be able to do that, there is clearly the potential that they'll start charging premiums on that movement. So you've not only got the tax implications of all of this, whether there's duty to be paid or not, where you account for VAT, how you account for VAT, the change in the tax treatment is also going to have an impact on your shipping costs and your clearance costs and the way all of that fits together. So again, just absolutely echoing what Ian says, it's about, at the moment, it's about getting those supply chains mapped and working through each one to understand how this is going to impact you.
Great, thank you. I think we do one last question, which is IOS related as well. So in terms of signing up, does it matter which country you register in? And if so, do you have any recommendations?
You can choose to register for IOS in any country. Our recommendation would be probably to choose a country which you feel more comfortable dealing with the tax authorities in, because you may have to deal with the tax authorities. My suggestion would be either Ireland or the Netherlands, if I'm going to be brutally honest with you. We have heard the Netherlands apparently have got a system issue, which means they can only accept something like 30,000 registrations. So I would say if you're thinking of the Netherlands getting early, and I think Ireland's system is about to go live very soon. Yeah, I would probably choose one of those countries over some of the, should we say, other EU member states.
All right, thanks. We are over time, so we're going to wrap it up. So in terms of final thoughts from our standpoint, well, VAT is never simple, but from a marketplace sales standpoint, this arguably makes selling into the EU easier. So from that standpoint, I'd say it's a positive. It will certainly make it more complicated or different if you're selling from your own side as well. So, but in general, I think we see it as a positive change as a marketplace in the EU. And I hand it over to you, gentlemen, for any final thoughts.
I think just from a supply chain side as well, and you know, supply chains were complicated enough before all of this happened, and everybody's now adding the X percents on. So I would definitely, exactly what Paul said in that table, map the flows, understanding all of the businesses involved in the flows, you know, specifically the carriers and things like that. So that, and as you said, Hakan, on it's making sure you get the right side on the customer service. Yep, on it, but really look at all the flows and then make sure you make the right decisions on. There are options that people have. Lorenzo, I thought maybe over to you, and then Paul,
Yeah.
as you started, you could finish.
I think that what we always look at in terms of customs processes is data. Data is absolutely key, and having the right sets of data to allow the declarations to be generated is important. You know, there is a simplification that's being brought in called the super reduced data set that allows for low value goods to be declared to the authorities with a lower requirement in terms of data, but it's not disappeared. So I think it is just worth understanding that things like commodity codes and having the evidence of value and understanding all of that is still going to be a requirement, even though these simplifications are being brought in.
Yeah, I think just to wrap up from my perspective, it's, in theory, this is all a simplification, but I think, you know, we've got a big challenge ahead of us over the next few weeks. It's not going to be easy, and I think, you know, the sooner you can talk to the various online marketplaces that you deal with, the sooner you can talk to your fast parcel operators and couriers to understand what their capabilities are and how they plan to deal with it. And the sooner you think about what your business needs to do in and of itself to address this, the better place you will be. The final thing I would say also is also think about your suppliers. And we were dealing with a business yesterday that sells other suppliers' products on its website. For these purposes, it could be held to be an online marketplace. So don't rule out the fact that you yourself might be deemed to be an online marketplace because of the relationship that you have with your suppliers. That certainly is a possibility. I think there's a question in the chat that addressed that as well, and that's something that we are beginning to deal with as well from a number of clients. So it's not straightforward. I've tried to summarize it as best I can in an hour, but I do appreciate that this is complicated. I'll put our contact details on the slide deck and we'll send that round as well, so that if you've got any questions that we haven't been able to answer, then do feel free to get in touch with us and we'll try our best to help.
Thank you, gentlemen. Yeah, we do have a lot of questions remaining, and we will reach out and try to get them all answered. We are well out of time, so with that, I'm going to hand back to our host, and thank you everyone for being so engaged and for your interest in this issue. Thank you very much.
Thank you, everyone. Thanks to our wonderful panel and all of the attendees for sticking with us to this time. There is definitely a lot of information to digest. You will get a copy of the slide deck, and this webinar will also be available to view again, so don't panic. And as Paul said, everybody's contact details will be on the slide deck. So if you did have more questions, you can get in touch and get them answered. In the meantime, please do follow Fruugo on LinkedIn, where you can get more insights about upcoming retail trends and for more information about future events. So thanks again for your time today, everybody, and you'll get a follow-up email with all the information that was discussed today. So So hope you learned a lot, and thanks again to our wonderful panel, and I hope to see you all again soon. Thank you.